Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, you know what? We didn't start. We're ready to start the music. There we go. Well, so we got an interesting market, couple of developments overnight, really bad Chinese data, and market overall hopeful for some stimulus. So all of the markets up overnight, but the treasury's starting out selling. So these are the kind of situations I hate. But then at 9 o'clock Eastern time, which is in 30 minutes, Donald Trump is going to come and piss in everybody's Cheerios. So that's what we got ahead of us today. Let's go to the charts. So you can see here in the treasury, very tight day yesterday. I mean, there was some movement, but it was super tight. But then soaring overnight. Same with the S&P 500. Well, the S&P 500 was doing really great until like the last hour or so of trading, and then just went. But they're recovering it. So, oil looking a little sad. Gold and silver still just look. Oh, those are beautiful charts right there. I think. I mean, if you look at a bigger chart, do I have a bigger chart? Yeah, if I have a bigger chart, it doesn't look so hot, right? But. This run that we've had here in gold the last 2 weeks looks really great. So, and Bitcoin. Oh, okay. Well, let's come back and look at Bitcoin on a better, more granular chart here. Bitcoin still kind of going sideways. I'm surprised that they haven't gone lower because this continues to look like a dumpster fire. Oh, we're getting PPI here. I'm sorry. I'm like super behind. US PPI, core PPI, month over month spot 3 versus an expected spot 3. And the headline number also in line at spot 4 versus an expected spot 4. So numbers in line, but they are buying big time. Oh, no, wait. Did I get that one wrong? Oh, those were the expectations. Okay, so the US PPI month over month is spot 2 versus spot 4. So the headline PPI is good. I haven't gotten the core. Core PPI must be good. Maybe I need to refresh here. Yes. Oh, okay. So US core PPI month over month 0 versus spot 3. Oh yeah, that's good. That's real good. Gary Gensler is more and more targeted by all the Kryptonians community since the Banksman scandal. Well, he should be, to be frank. So I can't trade this. Look at the liquidity. Eee. Look at the liquidity in the micros. But look, they're bringing the interest rates all the way down to 3.27. Sorry, 3.727. I'm stupid. They're below 3.75. I remember yesterday when I was like, I don't know if they can get below 3.9, 3.8. Well, I was wrong. I think they should be, because it seems to me like the SEC and the other relevant regulatory authorities were sleeping on this. They knew shit was going down, and they're like, well, we don't want to hamper innovation, guys. Bullshit. You were in on it. Not you're in on it, but I think that they were being kind of a little bit partial to crypto, maybe to some extent. Charlie Munger had some comments out this morning about cryptocurrency, and I echo his comments almost exactly. It's so sad to see people in my own country drawn in by some of this complete, absolute nonsense. Just Ponzi schemes, blatant Ponzi schemes, stealing people's wealth it's just so sad to me. It really causes me distress to see it. Well, so here's the micros coming back a little bit. So I could maybe try trading this now. The CPI is definitely a piece of news that should be able to like move the markets and everything. I do kind of feel like that you might be getting too high. Well, also the micros, the prices that the micros are giving me here don't make much sense. The prices, so they're actually higher, even though both the 30 and the 10 have moved higher. So the micros are like completely disjointed from the regular treasury right now. I think I need to sit this out. I'm gonna disable my trade here. It was pretty good. I had forgotten about PPI I hadn't, but I had, like, at the moment that I had sat down, I was being ADHD and I'd forgotten about PPI. But I wasn't expecting PPI to create too huge of a move. In fact, even now, I'm a little bit wary of it. Like, I'm concerned that this could come flying back into our face here a little bit. But the overall market, the S&P 500 just went, wow. So they went from 4,000 to 4050. Nah, I think they're probably going to give some of this back over the session. Although I have to say, US core PPI month over month, 0 versus 0.3. That's... Seeing it 0, that's pretty... Oh, okay. Because I would have been happy with like a 0.2, right? Forex Live notes on Twitter, heavy US dollars selling on this data point. That's the most I've ever seen a PPI report move the market. The data is all tier. These are totally right. I mean, for sure, there's reasons why, and I think that it's totally in line. Although I do suspect that they're going to have to give away some of the gains. This is a really big move for PPI. This is a really big move. Okay, Goldman being quoted by Carl Quintilla. One should not dismiss the change in trajectory. The market arguably needs to now view inflation as a force that can also surprise to the downside. Ooh. Oh, now this is the point. Did you know Haim Bodek? No, that name does not sound familiar to me. Gotta be the same thing. Well, the, you know, the question here. So here's an interesting question. Okay, this is I'm kind of contradict everything I ever teach, right? Based on all currently available information, what is the actual correct interest rate? Because I'm a little bit skeptical that it's 3.75. You know what I mean? So when I see a price that I feel like is like really out of whack relative to the fundamentals, that makes me a little bit nervous, right? I would much prefer a trade where it's like the market has been out of whack with the fundamentals, and then we just got something and the orders are now going to come in and put it back to where it should, or at least make a move in the right direction. You know what I mean? But it could be the case that I'm wrong, or it's not that it could be the case I'm wrong. I probably am wrong, right? It's super hard to predict and judge something like that. But is it like really, if they're going to go below 3.75, because I'm always looking at quarter interest rate jumps in the treasury market, you know? So if we're at 3.75, then the question I'm asking myself is, okay, does 3.5 make sense? I don't think it does. Like for 3.5 to make sense, there would have to be, I think, a real turnabout in the Federal Reserve. Like the Federal Reserve would have to be like, well, we are going to do 50 basis points like we planned, but after that, maybe we just hold, you know, that sort of a thing. I think that's kind of the sort of thing that the market is kind of starting to suggest. But you can see they did come back pretty good, right? You'd have to expect that with this kind of a move. Because of the kind of the hole that this rips in the fabric of the market. So I'm looking at this and I'm like, oh, Seth, you should have traded it. You could have made money. But I'm just feeling FOMO. I would not have made money if I had traded that move, unless I was like in before the move, right? Because the liquidity in the micro was just like, was not there. Oh, I wouldn't call this a typical pop. That was 50 ES points. That's PPI does not usually move the S&P 500 50 points. That was a pretty big, but I think so. The thing has been like overnight. Okay, so first of all, I keep hearing this thing that's like Sino-US relations seem to be improving because Joe Biden says, oh, it doesn't seem to me like China is going to be attacking Taiwan anytime soon, sort of a thing. It sounds like total nonsense to me, but okay, whatever. Maybe it's improving US-Sino relations. But then the thing is overnight, the data that came out of China was really nasty. The data that came out of China was really nasty. And Fed's Brainerd was speaking kind of dovish, even though she contradicted, you know, what other FOMC members were saying. But I don't know if any of the FOMC members' comments up until this point really matter. Like, now that you see that you've got zero inflation in PPI, I'm really interested to see if that shifts their positions at all. Because what it seems like is going on to me right now in Fed world is that there's a little bit of a divergence in opinion. Some of them are starting to get concerned about that we're moving into a downturn and that we need to start adjusting. As well as others are like, oh yeah, like Taylor rule, you know, inflation needs to be over 5% in order to bring it down. That sort of a thing, right? So I think there's kind of that divergence. This is kind of a key data point for them if that's the case, right? So you combine that and then everything else that we got overnight and you get a pretty big move. But let's see where they settle at, because this is coming back pretty hard. New York Fed, Empire Manufacturing 4.5 versus an expected -6. It's just a little too chaotic. Keeps dropping. Now we're down to 112.24. By the way, are some of these no. So 112.19 was the high from after the CPI. So that's worth keeping an eye on. Right there. I mean, if there's a trade in this, I think the best trade would probably be wait for the pullback and go long on it extending. But I don't actually think that's what's going to happen. I think it's going to find a spot, maybe here between 24 and 19, and then it's just going to chop around in that range and confound us. That's what I'm worried about. For instance, if you look at gold has already completely retraced the move. So I'm waiting for like Fed guy or the Fed whisperer to come and say something, comment on the report, but we haven't gotten anything yet. Let's come over to Zero Hedge and see. Oh, let's see here. Walmart surges after beating expectations, boosts forecasts, and unveils a new $20 billion buyback. They don't have a story on the PPI yet, though. You know, one of the things that I think is funny is I've seen a lot of people on TikTok that are like, that are still bearish, you know? Like I made this TikTok that was like, you know, things like the market has changed. Like we have to adjust now. I didn't say what I thought the right strategy for the new market was going to be. And I think that this move already kind of maybe already shifts my expectations. Like I'm really am starting to wonder now if this doesn't end in the Federal Reserve bringing interest rates back down to zero and keeping them there forever again. Instead of having interest rates stay at 4% for forever. You know? That's what I'm thinking right now. Like maybe this case where we go into a recession and the Federal Reserve has to drop interest rates really, really quickly. Maybe that just became a lot more likely. There's another few ticks down. I don't know. For me, I think one of the things has changed. Can I pontificate a little bit? I feel like that, especially going into the election, that there's been a lot of like soothsaying, you know? It's kind of been like, well, guys, if you do this, this is going to happen. If you print all this money, there's going to be crazy inflation. Republicans are going to take over the House. Oh, hey, if you allow mail-in voting, it's going to change elections, and it's probably not going to change elections in your favor, Republicans, by the way. Yeah. And at this point, I think that it's kind of already gone through the, okay, like all of the things happened or didn't happen. Now what sort of phase? So from this point forward, I think that it matters much more that you have to build things now. Now it's like, okay, but what do we do about it now, right? But like now is building time. Kind of like that I had put out a video about the Jigsaw workspace that I think is kind of more of a beginner, like one of the first videos that I did was going through my workspaces. So, and this is a much better video in that respect. So I kind of like that. It's kind of in line with what I think my strategy should be. It's a building time. But if we go into interest rate cuts again, then it's really building time, isn't it? Oh, what do we got coming up here? Oh, okay. We got Cook and Harker speaking at the top of the hour. Oh, so we're not going to have to wait for very Seth. You got to be on top of this shit. Okay. So we got Cook, Harker, 7. Bar at 8. Let me see if I can get... Okay. Cook, due to speak about post-COVID challenges facing women at a virtual event hosted by the Bank of Canada. Audience questions expected. So that one, I wouldn't expect to be like huge one, but he probably will say relevant comments. Bar. Scheduled to testify on the oversight of financial regulations before the Senate Committee on Banking, Housing, and Urban Affairs in Washington, D.C. So that one's probably more likely to be like a shit show. We all know how those things go. Beautiful girls here. Oh man, we've got to go check that out, guys. Just kidding. Just kidding. Yeah, so Donald Trump's press conference is supposed to start at the top of the hour, but those things usually start late, so. Okay, so there's the comeback. I do not feel confident enough to trade this with my live account, so I think I'm gonna go with sim trade here, and I'm gonna be really. So I will take one at 19, but I'm not gonna load up too much here yet. But I'm just seeing that last little dip down was a little bit more dramatic. The cumulative delta has basically all equalized, so they're going back and forth there at 20 quite a bit. Nobody wants to hit 20.5, huh? Trump wants to concede today for the no. Which the all of the sources that I've seen say that he's going to announce a run for president. That's what all the sources say. Maybe he is playing the media. I hope he play. So here's the thing, okay? I try to be pragmatic, okay? I think Donald Trump was kind of had to be the choice last time around. And we ran through it, and I think that there was a lot of unfair things that happened and everything. But the kind of the thing is that since he lost, especially, it's just been downhill, man. He's not in line with the voters. The people that he keeps pushing to the top are idiots. It's just so like this thing yesterday. Okay, so this girl, what is her name? Lake in Arizona, who was running for governor. I mean, she'd been throwing the bombs. I didn't realize that she was as toxic to Arizonans as she was. Because now I'm finding out that like she had dissed John McCain and all these things, which look, I don't like John McCain at all. Okay, but you don't say that to the people in Arizona that voted for him for decades and decades and decades, okay? Right? That should have been a winnable race, right? And it clearly didn't work out for them. And I think that you have to like where does it come down to now? And I really don't see how you justify saying that Donald Trump is not a negative factor here. Right? And I'm seeing that sentiment, just it's overwhelming sentiment from everybody in the Republican Party, is that it's like we've grown past him now. Like, it was necessary for him to come in and mix things up, and I think that it did some useful things to kind of help show where the some issues that had kind of been ignored by the establishment, and say, hey, you come in and you let people be heard on these issues. It's to your benefit, right? Okay, but now the Republican Party needs to move towards developing more serious candidates, because that was probably the best setup you're ever going to get going into an election, and they totally blew it. Now the other thing is the early voting. It favors the Democrats right now. I mean, if the Democrats go full bore and put all of their organization into taking advantage of early voting, and Republicans don't, then guess what's going to happen? The Democrats are going to. It's going to help Democrats, right? So that's another factor, and I think that kind of made some of the polls that we had going, the last month going into the election were incorrect, because really, when you look at it, the results were pretty much in line with what the polling had been saying, like, from the very beginning. So it was just like that last last month there was kind of this shift, and it didn't matter because of early voting. That's what really happened there, right? Is a complete mess for the Republican parties now. They have to get rid of him. Yeah. And then if he loses the primary, he goes and starts his own party, maybe. So that's why today's title is Please Don't. Today's title is I hope that he's just playing us and that he's not actually going to announce a run for president. Well, we'll see. Supposed to be at 9 o'clock Eastern time. The Wall Street Journal reporting from Sam Bankman-Fried that the latest FTX fundraising attempts have been unsuccessful. Not really seeing any significant shift from Bitcoin off of that, though. Okay. Okay, so we did get some a transcript of a Fed speaker, Harker, but it was pretty much in line with what he had said in the past. Oh no. I guess that's my exit. Well, that wasn't too bad. But if I had taken that live, I would have only made $10. I don't think that was worth it. Considering how far the regular treasury moved for it only to be worth $10, that's kind of... Hey, NASDAQ killer, how you doing? What's this? The most regretted college major is journalism. 87% of those surveyed said they would pick a different course if they could. Several I've known has said the same. We've lost far too many good journalistic minds. Journalism is increasingly difficult to do. Is it because you have to, there's not very many job openings for journalism? Hey, Ninja Trader, I don't think that my Ninja Trader lags, but if it was lagging, I don't think I would be able to tell. Because I thought, if I had a DOM up, then I'd be able to tell. We are seeing a decent run in cumulative delta. I didn't like the amount that it came back there in the 10-year. That I probably got just scared out and should have stuck with it, though. I'm a little bit like, I don't think that you go and breach the highs now. I think that you come up to a point, and I'm not sure if we've gotten high up enough. Maybe it's 28, but I think you come up to a point and then kind of run out of steam, right? Also, I am a little nervous. Like, I would think that this FTX headline will eventually weigh on the cryptocurrency market. And the cryptocurrency market has been weighing on equity markets overall, too. So that's also something that I think we got to keep in mind. I'm kind of wondering, like, are there some banks or other major players with exposure to Bitcoin that we don't know about that we need to be concerned with? You have to wonder. Okay, So it is now 9 o'clock. I haven't heard anything about Trump. Certainly there must be a live stream somewhere. Maybe on Truth Social. I don't see anything. They're all pushing that FTX, that money was laundered to FTX from Ukraine, which I haven't seen, have not seen any evidence of. Our SBN Twitter will have it. Oh, I have it wrong. Oh, I have it wrong. It's 9 o'clock p.m., not a.m. Oh, I got myself all worked up for nothing, guys. I feel so stupid right now. I feel so stupid. Hey, look, it did come back down, though. Working in the crypto field, and slowly we see an impact. All those public node providers have a lot of technical issues right now, maybe because everybody is selling and the load is too high. Oh my gosh, I saw this video. So there's this video from somebody that was a super stonk supporter. I just want to go on record right now as, you know, part of the globalist elites that super stonk is an awful place to go and get your information from. There is so much stupidity on that subreddit, seriously though. And but he was talking about how FTX, like when they went and showed their assets, that they didn't have like any Bitcoin or Ethereum on their books, right? Well, I think that the post is misleading because number one, all of the Bitcoin and Ethereum got stolen, right? That's why they don't have it. Right. And he was like, so that means that when you were selling, it wasn't really impacting the market. And I'm like, no, like that's not quite how it works. Right. Or really what happened was that there was buying that shouldn't have happened in the first place because those dollars never actually existed. That's what really is happening. Right. Because they're making money out of thin air. They're printing it. And then they're making it, you know, they're giving themselves loans and with it and making even more money out of thin air. That's what happens. The buying in the first place shouldn't have happened. He had it completely backwards. And but you know, they didn't allow stitches, and I've kind of been telling myself to be nicer to people on TikTok, and so I didn't make a video about it, but it really kind of bothered me. Anyways, yeah, Charlie Munger was on CNBC early this morning, throwing the zingers at Bitcoin, right? And he said, you know, reputation in financial matters really matters a lot, and he's right. He's right. Your reputation matters. There's been many people that have tried to denigrate my reputation with all sorts of ridiculous lies, and you know what? Everybody just laughs at it because everybody knows that I am entirely truthful, and I'm trying to look for like all of the things that I can say. I'm like trying to talk myself up here. I don't like doing that. But I think that my viewers understand that I would never say anything that to mislead them, and that I'm very, very cognizant of making sure that you guys get all of the right information to the best of my ability, and making sure that you understand the risks to what we're doing, right? So when they say ridiculous things like, "Oh, he pushes the Jigsaw affiliate," that's not okay. Everybody just kind of laughs. It's like, well, that's the software that they use is good software. Like, you know what I mean? And I think that a lot of my success has been due to the fact that, and I don't know how people can tell, but I don't have guile, and I don't ever try to lie to people, and everybody can see it. And I think that that's why people trust me, and that's why the YouTube channel has done well. So then you go and you look at Bitcoin, right? And it is just like one shady thing after another. It's one shady thing after another. And people keep telling me this is going to be the future of finance. No, it's not. No, it's not. It's done. It's already the chance for Bitcoin to become like a major currency passed in 2017. When they made that change to the blockchain, that was it. That basically guaranteed that all Bitcoin could ever be used for is illicit activity. And I hope and pray that it's only a matter of time before the regulators come in and put a kibosh on this thing. They start holding Bitcoin to the same standards that everything else is, which is what should have happened from the very beginning. From the very beginning, it should have been like, these are securities. You're issuing securities. Not Bitcoin itself isn't a security, but a lot of these other things are securities. And they should have been regulated as such. These ICOs should have been required to have the same transparency, and failure to follow that same transparency should have resulted in prison sentences. They were too nice. And what's going to happen is as soon as the regulators start actually doing their job, there will be no reason to own Bitcoin, and it will go in the dumpster. That's what I think is going to happen. So we did have a good pullback here, and right back to the price that we were at. So they may be developing a range here between 23 and 26. It seems like they did decide that 19 was too low. If you put me on TikTok, I would be blazing fire from my mouth. They will ban me just like every other trading group except... Like, the thing that's really frustrating about TikTok is that they don't ban things. Like... Oh, there was so much financial misinformation out there on TikTok, and they never did anything about it. Never did anything about it. There's so many thoughts on TikTok, they don't do anything about it. You know, like I enjoy seeing a pretty girl on TikTok just as much as the next guy, but every once in a while I'll come across something that's really explicit, and I'm just like, how are they? You can't do that. You can't do that on TikTok. Get out of here. Well, I'm not quite sure where we go from here. The treasury kind of looks like random noise to me at the moment. Gold came all the way back. 6J is mirroring the treasuries for the most part. Dollar did get creamed. They went all the way down to 105, but they are bouncing pretty hard. It's like a wannabe porn site just like every other mainstream. No, I think like, I don't know. Okay, so how much does the thirst traps on TikTok factor into its success? I don't know. I kind of feel like that I don't get very good content from TikTok lately. It kind of makes me want to not use it as much. Like I used to be like, okay, we want to watch TikTok to catch what trends are going on so that we can try and make those trends and make the account blow up. But like it doesn't work that way anymore. So I don't know. I don't know. maybe TikTok is already over the hill. They're coming back down there. New pivot, or sorry, swing low. Oh, and what's ES doing here? It's going to be interesting to see what ES does on the open. Nah, well, like the thing is that at the beginning in TikTok, like it was like girls would do thirst traps, right? But they had to be careful about it. If it was too explicit, their account would get banned. And I think that still does happen. Like I think that a lot of girls still get their accounts banned. Okay. But they fell into the same trap that Twitch did, where they said, well, yeah, we don't want girls basically in their underwear on this app, but you know, if it's a swimming suit, then I guess it's okay, right? and then once you allow that in, then it's like, okay, so basically they can do whatever they want, right? Until they get just a little bit too thirsty, and then they'll ban them, right? They just play the line just soft enough that every guy is basically flooded with this stuff, right? And it's not good for you. I'm just telling you, it's not good for you. The overstimulation of your brain puts you in you're not as ambitious. So that's what it really is. Too much dopamine makes you less ambitious. Right? I think they come back to 19. Gone are the days when men had natural... No, I don't think that it was ever like that. Those men that had natural muscles, they did it because they worked. So here's the thing about that. There's something that I've learned about muscle and everything else like that. Okay, so like when you go to the gym and you put on muscle, a lot of what those guys are doing is generating hypertrophy. So I believe when you're like doing really high weights, you can it can create more muscle cells. So like you want to create more muscle cells and then make those muscle cells really big, and that's where you get the really big arms. So it's the hypertrophy. Okay. But that does not lead to strength, right? And the thing that leads to strength the most is developing the mind muscle connection. So your muscles are actually capable of much more power than we usually put out, but your nervous system is just not capable of sending enough stimulus to it to get it done, basically, right? So basically, the gist of it is, a lot of really strong guys, you would never know it from just looking at them, right? A lot of the strongest guys, you would never know it from looking at them, because a lot of the strength comes from your nervous system. Like at the highest levels, it's the nervous system that makes the difference. Yep. Anyways, so, but there's definitely too something that like men overall have lower testosterone and stuff. Oh, whatever. Treasury pushing down here again to 19. Well, now that we're revisiting this price, I'm a little skeptical of it. I'm starting to wonder, can they actually keep? Can they really sustain volume above 19? Powerlifting, you do 1 rep max every exercise once or twice and be done for the day. Yeah. So it is basically what you want to do, like when you're coming into a competition. Yes, we had another good inflation number today, Lucas. It was the PPI. So the PPI, core PPI, we were expecting 0.3, and core PPI came in at 0. So that really moved the markets. Plus, there was some stuff overnight. Data was pretty bad in China, etc. So the market is just overall much more hopeful about the Federal Reserve having to back off and possibly even reduce rates. I'm going to bet if we go there, I don't have access to this data, so we'll see when Zero Hedge does its closing synopsis for the day. But I'm going to bet you that the expectations of like subsequent rate cuts sometime next year are probably significantly higher now. Right? That's what's going on. I didn't trade it. I did take a sim trade and caught the pullback swing there. I'm not confident enough to do it on my live account. It looks like noise to me right now. CTAs don't care about bearish fundamentals or your bearish feelings. They simply trade the level and momentum of price. Yeah, but sorting those out to take advantage of are it's kind of a messy thing. Okay, so Steve Leishman's comment on the PPI. We not only have a better than expected CPI number, we now have a better than expected PPI or wholesale number, which means the Fed can start counting. The question now becomes, will retailers pass along the lower prices? This is a start, not the end. Haven't seen too much from my Twitter people. Haven't seen too much from my Twitter people. Okay, so anyways, the especially in Olympic weightlifting, they're really good at this, but basically you can overload your central nervous system. So you can come in and you do your lifts. Okay, I would probably do like 3 lifts at your previous max, two or 3 lifts at your previous max. The objective is you want to push your nervous system to its very limit. So you're lifting 1 rep maxes, the heaviest that you can do, until you basically you can't lift it anymore, right? So you completely burn your central nervous system, and then it will super compensate. And then that's where you can then get new PRs, basically. We are trading with the new 1030 OTRs today, by the way. Tomorrow, 20-year new OTRs. We are? Well, now, wait. The December contract is still with the old ones, right? They don't... But you could start trading March now, right? Oryx Live tweets, Feds cook. Inflation is much too high. Oh, no, OTRs re-anchor with new auctions. Cheapest to deliver stay the same. Gotcha. Oh, is that perhaps why? So there was a point there during the PPI where the micro treasury yield futures were completely disconnected from both the 30-year and the 10-year. Like the 30-year and the 10-year had pushed to new highs, and the micro treasuries were pulling back. It was really weird. It was only for about a minute or two, but I think the prices you're getting in the micros are much more reasonable now. 8.2. I think 8.2 to 8 would probably be an okay trade. I'm still seeing a lot of noise in the market though. I've heard a 1 rep max is bad because any exercise is less than about 5 reps is just that much more statistically likely to injure you, and injuries can set your hard work in the gym pretty bad. Okay, so injuries from weightlifting are very, very rare, and injuries from the strength specific weightlifting sports like powerlifting and Olympic weightlifting, like real injuries in Olympic weightlifting are very, very rare. And the only time that I personally have ever seen real injuries amongst my teammates, it was only when they had been pushed to their absolute limits, like we're talking about people that are the best in the world, or at least the best in the country, and they're going to the edge, going for a little bit extra. Then there's some risk to you, right? But for your average person, very, very, very unlikely to hurt yourself, right? And most of the injuries that we see in weightlifters happen outside the gym. Signal to noise ratio is low today. Well, I wouldn't say that. I mean, like here's the thing. We got a really important data point, right? And the changes overnight, I think, were significant too. Okay, so we're definitely seeing a shift here in the markets that I think we need to pay attention to, and it's a little bit unclear how all of the flows really go, because like from the S&P 500 here, for instance, right? Like we already moved up a lot since the CPI, so like how far can that really go, and how much can you really move the Federal Reserve overall, right? So there's definitely some information to be had, and normally I think it would have resulted in good trades. I think that PPI was a little too volatile to trade, right? And now we're just like we're in the slosh. Everybody that missed the initial trade is now coming in and trying to make money, and they just get screwed over by the market makers, right? I did have a sim trade that I took from I think it was from 19 to 24 half or something like that. So there does appear to be some, but the further away we get from that, the worse it gets. And especially now, remember the high after CPI was 112.19. So that provided some support, but now we're kind of below that. And all of my cumulative deltas are just noise going sideways. So the flow has already come and gone. The flow has already come and gone, and we get time to contemplate now what our next moves are. By sim, no, it was a sim. It was I don't lie about the. Some of you guys come in and you say, "Oh, I bet you that when Seth says he's trading sim, that he really is trading it live, and he just doesn't want us to know." No, I never lie about that stuff. Okay, if I say that it's sim, it's sim. If I say that it's live, it's live. If I don't, if I'm trying to hide it, I just won't say anything. But I'm never gonna say something untruthful. Okay. Leave a like so the Fed cuts rates back to zero, guys. If only liking my YouTube channel had that much power and influence. No, I don't think you did. Just curious here, why with this career change you didn't consider quant trading? You have the right degree, your profile is also to research data you could apply. So first of all, I don't think I'm making a quote unquote career change, right? I'm studying for a Series 65 and I don't know what I'm going to do with it, but I think that it leads me towards doing stuff in the investment advisor business. I think that might be me running my own investment advising business on the side. Okay. I would not be opposed to going back into the financial industry. Doing quant trading for a big quant firm definitely appeals to me, and I would really like to do that. But number one, I do not have the math skills necessary to be like just a quant, right? I would be a quant developer. I would be, these other guys do the math and come up with the crazy things, and I'm just really good at understanding it and programming it. I think I could really excel at that, right? So if I got into that kind of job, that's probably what I would do. But there's some problems with it. Problem number one, if I was working for somebody like that, probably wouldn't be able to live stream for you guys anymore. I don't want to do that. I don't want to give up the stream. Somebody would really have to pay me to give up the stream, right? Like if JP Morgan comes and they're like, we watched your stream and we think you're really good at understanding the treasuries, and we would really like you to come in and join our block trading desk to specialize in trading fixed income instruments, then I'd be like, okay, well, if JP Morgan wants me, I guess I have no choice. I highly doubt that's going to happen. They almost always pull those people like directly out of college and stuff like that, right? But then the next problem is I'd probably have to move. And I've been in this house for a while. I kind of like being in this house. I think I might live here for the rest of my life. Unless I become like a billionaire and I go and get a resort where we can have llamas. Sorry, alpacas. We want alpacas. And unless I can get a nice little farm where I can get alpacas, I don't want to move. And I'm not sure that New York or Chicago is the place for my family. So that's where it's like, again, if like the opportunity presented itself, I would probably try and convince my family and everything to do it, but I don't know if that one would actually be in the cards, you know? Yeah, statistics and probability is more important. Yes, and there's some really advanced probability models that I don't understand yet. Like I got this book, like if I had been through my textbook and I had, you know, felt like I understood all that stuff really, really well, which is probably going to be like a year worth of concerted study, then I could say, yeah, be good at that stuff. Okay, so what is Jota Japim say? Hello, I programmed stuff for NinjaTrader, basically aiming to get average stuff like trade size, average delta, etc. Can you give me any idea of how high frequency trading or more advanced algorithmic trading occurs? Would you say this is related to liquidity and market orders tracking and quantifying? Yes. So if you look up the book, and I've talked about this on the channel a lot, but it's called Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Bouchot. There's also Market Microstructure in Practice, I think is another book it's called. But basically, these go over the prevailing research about the market microstructure. And as you go through that book, even though they don't explicitly say it, they're basically showing you all of the models that you would need for the basis of a high-frequency trading system. So a lot of it is looking at a correlated asset. So the first step of this, if you want to get into HFT, okay, the first step of HFT is arbitrage, right? Is you find two assets or a collection of assets that have a relationship, and when they diverge too much from that relationship, you take a trade to try and take a small amount out of the market, or you set, based on these correlated assets, you set what is the optimum bid and ask, and hope that, you know, somebody that doesn't know what they're doing hits into you and fills your limit order, right? So that's the first step, is arbitrage, right? And then the next steps are understanding things like the book and so forth, so that you can maybe try and get a better spot in the queue, make your changes faster, and read the current volume to reduce the chances of taking fills on toxic order flow, or, you know, basically looking for indications that there could be informed trading in the market and adjusting your prices accordingly, so that you can still do optimal market making. So this book talks about that sort of stuff. Yeah. Yes, as I understand InterTrader, I would say it's possible to develop arbitrage trading. Yeah, you could. Okay, the book is called Trades, Quotes, and Prices: Financial Markets Under the Microscope by Jean-Philippe Bouchot et al. And then if you want to go beyond that, I would get on LinkedIn and start trying to find other people in the trading space. And some of these real professionals do on occasion throw us a bone and give us resources that are worth reading. Okay, so we have now retraced the entire PPI move. Can you believe I don't know how I knew that was. What do you guys think? Did here, I'm going to ask. Engage with your audience, start a poll. Did Seth know? How did Seth do that? He knew. You got lucky. What do you think? Because I came out there and I was like, I don't think that this is one where it just goes and then it keeps going. I think that it's probably retraces. I said that, right? And I was like, this is why I'm like too nervous to take a trade about it. Because I would want to look for the continuation. And I'm not going to trade against that. That's crazy. But I think it is going to retrace. So how did I do that? I don't know how I knew. Okay, well, already with 3 votes, he got lucky. Cool. I'm glad that I have your confidence. You're right, Octavius. You're totally right. I really think that's really how I view myself. Like at least in terms of algorithmic trading, like I know enough to get in trouble. Or really what it is I know enough to know how hard it is, right? But most of the strategies that I've come up with, I go through and back test them, and at the end of the day, I'm like, well, this looks like I may have like a real market inefficiency here, but I would need much better resources to be able to profitably trade it. I would need to be much faster, is usually what it comes down to. Gonna retrace, but I didn't call it. But I did take the trade. Well, okay. Oh no, OBS reset on me. We're okay. We're still here. You come back and you can see me. Okay. A few of you say he knew. A few of you are saying he knew. Thanks for backing me up, guys. I think on this one, the thing that's surprising to me a little bit is it only took about an hour to retrace. So you knew you were just too scared. Well, yeah, I totally was. Well, I don't think it was just that. The places where I saw opportunity, I didn't really like what the micros were showing me. So I didn't feel like the liquidity conditions were right for me to be able to take a trade. So that was probably a larger factor than being too afraid. but I was a little bit of a pussy about it too. But that's because I kind of already felt like I'm not on the ball, you know? Like I came in and I wasn't sitting there like, okay, here's the PPI, I'm all ready for it, right? So I had already made a big mistake, and that's has me being like, okay, so I gotta be more careful. I did come in and take a sim trade that was really good, so that puts me back into, okay, if I do see an opportunity, maybe I can take a trade, but I'm still gonna be really cautious. Like if I do come in and take a trade, I'm just gonna be a small one. Right? Like it's coming back to like trying to be more self-aware and realizing the situations where I'm going to be able to make good decisions and where I'm not, right? Oh, what's this Luke sending me? A trading interview with Jane Street, eh? So that's another thing, is that if I was going to go for one of those jobs, I think I would need to do some prep, because I've seen a couple of posts on LinkedIn and stuff where people giving this kind of preparation. And I think that I would probably have to do a little bit of leak code perusing, do a leak code problem every day, sort of a thing. In Python, probably. Okay, so you know what? When I put my computer to sleep, this Epic Pen like doesn't like it. I need to restart it. Okay. We might be too old for this. I don't know about that. But back to the point, the biggest thing holding me back from doing something like that is wanting to stay in Utah. Of course, I keep saying, you know, there was this period where I could have gone to New York. I should have just done it. But thank you for the channel. Oh, thank you very much. I thank you guys for the channel, because I think that the channel has only been able to be the way that it is because I have such a good chat. They probably want out of college virgin dudes they can mold into. Yeah. Well, I think that they want people that don't have bad habits already, right? Yeah, it's probably true. But it's not just that. A lot of the people that they're going to hire to those desks, like those block trading desks, for instance, are people that studied market microstructure in school and got master's degrees from doing it. Like the best path for me, well, maybe not the best path, but a path for me could be go back to school and go to the University of Chicago and get a master's degree, and then try and get into a firm. So the next wave of traders is gonna be like, no. They do want the kids that are just graduating, so like the 24-year-old kids. Like the whole thing with the finance industry is there's a bunch of different ways to get in, right? I'm just saying the best chance to get in, especially if you want to get into a really prestigious place, is to have relevant educational experience and go straight from university into the firm, and or do an internship. That's your best opportunity to get into those. So trying to move laterally when you don't have professional trading experience for another firm, probably not going to happen, right? Probably not going to happen. But I don't know if that's what I want to do or is the right thing anyways. I feel I've always felt that, okay, Seth, this is the thing that you're supposed to do. Now you understand you're engaged in finance. Not everybody is engaged. Not everybody likes it. Not everybody has the, enjoys the math, enjoys the news, etc., etc., etc. You do. So that's what you need to do, is you need to go into finance. And the advantage of finance is that nothing creates more opportunity and growth than finance. And so we need to use the skills that we have to help provide more opportunity and growth for other people. For other people that cannot do this themselves, because the truth of the matter is here, and I've been through this a long time, and I think it's taken me a long time to come to this road, but the inevitable conclusion that I have come to after all of this is that it is not something that everybody can do. It's just not. Not everybody has the right mentality. I don't know what the deal is about it, because I feel like I should be able to just come in and say, okay, here's how I do it, and then they do it. But most people won't even listen, right? They're never going to be led to the stuff that they really need to know to be able to do this stuff effectively. And when I look at where are the opportunities where I'm going to be able to make those kinds of impacts, because look, I'm not a guy with connections, okay? I don't leave my house very often anymore. Since we've had kids, we've been kind of recluses, okay? So I don't have a tons of connections and stuff like that, okay? So I don't see myself as the person that can raise capital or be in venture capital sort of thing, like that would be a big jump, right? But what I do see is that a lot of baby boomers are retiring, and they're going to have to manage their money. It's going to be it gets more complicated once you get to that age. It's more complicated than just contribute to your 401k. Okay. They're going to have to manage these things. And when their when their kids get the money, they're going to have to manage these things. And so that is one place where I feel like I have the ability to make a difference, and I should. That doesn't mean that I'm going to stop doing the things that I'm already doing, because I think that the thing that I have the greatest ability to help with is that there are a lot of people out there that are like me, and they want to be successful at trading, and they just try and never figure it out, right? And we understand why. It doesn't mean that when you follow everything that we do that you're guaranteed to have success or anything like that. But we know where the pitfalls are, and we kind of know the path that you need to start on to even stand a chance. And so we've put all of that information here on this channel, and we're going to continue to put that put that message on the channel until it breaks out and we really bring more retail traders to it. And my dream world is a decade from now, where these ideas are more widespread in the retail trading community, and retail traders are relying more on empirical evidence and real study of markets and a sound understanding of statistics in order to conduct their trading. And we no longer talk about all of this price action technical analysis BS that doesn't actually work. Unfortunately, the case is the way that people are, that probably most people will always do technical analysis. But that's to our advantage. Those of you that are smart enough to see beyond that and learn the real stuff, it'll be a little bit easier for you because there's less competition in that, right? And that's the primary thing. That's the primary thing. It's just that we've done a pretty good job at that, I think. I feel really proud of the content on my channel. Maybe I shouldn't. Maybe it's just not engaging enough and YouTube doesn't like it and I need to do better. But I really like the videos that I made. And I think that it's only a matter of time. We just got to keep doing what we're doing, and eventually that will will happen. And so I feel like the big mind shifts and everything that we need to have that, you know, we've kind of done those things, and so we need to continue learning. And so the new learning stuff has to be along the lines of either the machine learning or investments advising. That's how I feel. The reason why most of them are math graduates and not statistics graduates is because there are not many options with maths except teaching while stats is a full-blown career. I mean, is there? I don't think that there is an actual statistics degree, though. I think it's just a math degree. But the thing is, and the other thing is that the people that are most well, like the people that first came into this field, right? They weren't math degrees, they were physics degrees, right? So there's a bunch of different fields that actually do learn that degree of statistics that they need, right? Price action will always be there because many people see easy dollars. Yep, it is. Well, it's not just easy dollars. It's people are naturally attracted to those solutions, I think. I don't think it's possible to fully explain to a retail trader, even an experienced one, how competitive modern markets truly are. Yeah, well, there's definitely this thing, like I was kind of hinting on this in my TikTok that I made yesterday, although I didn't post this one on YouTube because it was a response to a comment on TikTok. But, you know, as much as you might know about the market, it's still only going to be a teeny tiny fraction of the total available information out there, right? So I think that really should change your mindset, right? I only want to make a trade when I have something that I believe gives me a very high probability of predicting which direction it's going to go, because there's so many unknowns. That this is why the most important thing to long-term success in trading is being able to minimize the risks, is that it's already stacked against you just because you only have this teeny tiny piece. And so you have to be able to decipher when is the time where this teeny tiny little pieces of information that I do have will be the thing that matters, right? That's what I got to figure out. And I don't think that people come to that understanding on their own. Maybe somebody does, but it wasn't me. I think that you only understand that after being beaten over and over and over again, and having times where you thought, oh, this is an easy trade, it's certainly going to work out, and then failing miserably and having just an absolutely terrible trade, right? It's only then that you realize that, you know, as good as your edge might be, it's only a teeny tiny part of the market, right? It's only a teeny tiny part of the market. Can't explain that to people. So all you can do is come in and trade and learn it yourself. I mean, I can tell it to you, and you might be prepared for it to happen, but you're probably still going to make the mistake, right? You're probably still going to make those mistakes. I mean, just in the normal course of trading, you should encounter those situations where you're really confident, you really thought that you have the thing that's going to predict the order flows, and then you were wrong, right? And in fact, it probably happened 50% or more of the time. So, but you know, what actually moves markets? I think that the reason why the majority of retail traders fail is because they're trading wrong methods. Okay, 95% of retail traders fail. Okay. A certain percentage of traders have to fail. In fact, I would say the majority of traders have to fail. And only a very, very small percentage of them are going to be massively successful with it. It's a Pareto distribution. So that's just the way that it works. If you're coming in and you're, you know, over the course of several years and you're break even, you're doing better than like 90% of traders. Okay. Like that's how strong of a Pareto distribution it is. And so now when you've already gotten to that point, that just means you stand a chance. That's really what it means, is you stand a chance. You have enough information that you're not doing something obviously wrong, right? You're breaking even. Cool. That's better than 90% of people. But now how do you get into that top 1%? Do you get into that top 1%? Well, you have to have edge. And that hedge is very, very, very difficult to form, right? And it takes a very concerted effort to develop that edge. But if you're coming in and you have these perceptions about markets that are just wrong, for instance, you think that markets are about finding a particular price action setup and having a stop that's really big and all of these sorts of things, you're never going to figure it out. You're never going to figure it out, because what you're doing is basically noise, and you're believing in something that is, for all statistical purposes, just noise, and it's just behaves in just the right way to make you think that it works and that you just need to get better at it, right? But the reality is that the entire premise that you're trading from is wrong, right? So if we can get people into the place where they actually understand what moves markets so that they can focus on the right things, maybe we can get that number from 90% of traders lose to 60% of traders lose, because that's more like what it should be. And I think the reality is that these large institutions that are trading index funds and so forth are too powerful in the market, relatively speaking, and that they're leaving a lot of edge just kind of laying around everywhere. And so I think there's a lot of room for retail traders to come in and take that edge. And when we do, it won't be a good thing, because it'll basically mean that your passive S&P 500 fund won't perform as well. It'll increase the costs for your funds, right? But that's what I think that's what I think I'm here for, is to teach you guys that, right? High degree of variance in P&L, even amongst professional traders. You can be years below water if you ran a profitable strategy but had bad. Yeah, that's true. That is true. It is. I mean, that I think is the most difficult thing about trading, is that if you're just starting on your own, okay, if you don't have any other outside information, it's going to be impossible for you to really determine if what you're doing actually works or not, right? That's one of the things that here. So again, because there's a thread about this on Reddit where they're saying, it pops up all the time. Well, the reason why most traders fail is because they come in and they try it for a week and then they don't have success and they give up, right? Okay, like something like 70% of traders, or no, it was half of traders give up within the first month, right? And then 80% of traders have given up before 2 years, right? So they think their point, they think, is that most traders just don't push through it long enough, that all you got to do is come in and just keep pushing and keep working at it, and then you're going to have success. And that's not true, because they've done studies where they've shown that there are traders that have traded for 10 years or more and are still unprofitable, and they continue to trade. In other words, traders do not have the ability to come in and see what they're doing in the market and learn from it and develop a winning trading strategy. Most traders that continue to trade still aren't able to do that. Why is that the case? Because fat tails. You need too large of a data set to be able to actually learn from it. So the only way to actually do this is you have to start with the premise that you know is true from empirical research, right? You have to start with, here's something that we know, like the square root law of meta order impact. That's something that we know happens in the markets for sure, and that it's caused by the limit order book, and that any limit order book will show this behavior. And you might be able to develop an edge off of that, right? Now that you have a starting point that you know is true, you can base all of your progress off of how well am I doing it at that thing that I know is true. How well am I doing at that thing that I know is true, right? And then you can actually progress. That's how I'm able to come in and be like, okay, well, I don't think I'm on today, right? Like I wasn't cognizant enough of there was a piece of news coming. The liquidity wasn't very good. So how am I supposed to pick out an informational edge in all of this? It's not. It's just noise. So we just sit. So we sit on the sidelines and we develop ourselves in other ways, right? That's how you got to do it. There's no other way. There's no other, because what, you know, the way that everybody tells you to do it, it doesn't work. You're just gonna grind your wheels and you're gonna go nowhere, because it just has you grinding on a method that doesn't work. Prashant, Jane, good morning. How are you? I guess it's good. Well, I don't know. I'm assuming that maybe you're from outside of here based on your name, but that might not actually be true. So I was like, is it evening for you over there? Most of my viewers are over in Europe and Asia. Is it most of my viewers? I don't think that's true. I don't think it's most, but a really good portion of you guys that watch the live stream are. What is this, Lucas? If you keep driving your car every day, you will eventually become an F1 race car driver. Right. So there's this other side of it. The allegory that I like to use is the NBA. Okay. Like you're in Central Europe. Oh, okay. Cool. I don't know what the statistics are, but based on what I do know, the chances of you becoming a profitable trader are about as rare as the chances of you getting into the NBA. And like, here's the thing with the NBA and the thing that makes that particular allegory, or whatever we call it. It's not an allegory. I forget the correct term for this. Is a little bit different. And that is, you can come in and you can get really, really good at basketball, but unless you are tall enough, you're probably not going to do very well in the NBA. To perform at like the top level, you have to have some physical talent, right? And that's something that not everybody has and that you can't acquire. And it is the same with trading. It is. There are things about trading skills. You know, if you don't like reading the news, trading's probably not for you. If sitting down, if coming home at night and then sitting and reading your copy of the Wall Street Journal like it was the 1950s, if that sounds like a nightmare to you, then trading's probably not for you. Or, you know, coming in and reading Zero Hedge like we do now. But like that is finance. And if you're not into that, it's probably not for you. And it's not everybody has the mental tendency, I guess you could say, to be good at it, right? So it's not just a matter of get enough practice, right? It's you have to have something that actually works and provides edge, and provides edge from the very beginning, so that you can grind and work really, really hard. And then you also have to have that kind of those personal qualities that are going to give you the advantage over other people, because other people are going to be doing the same thing. Zero Hedge frown, right? Well, but like that's the only game in town for most retail traders, unfortunately, right? Don't read their political articles. Just only read the ones that are summarizing Wall Street research, right? Or pay for their $100 a month thing where they give you all the drops and just read those. Yep. They keep drawing on charts and think if they keep at it long enough, they will make it. There's practice and there's deliberate practice. Yeah. Well, what do they say? Like, practice doesn't make perfect. Perfect practice makes perfect. If you're practicing something that doesn't work, then you're not accomplishing anything, right? It's kind of hard because like I've always said, to some degree, there's always some leap of faith in there. In order to think that you're going to be a successful trader, takes a leap of faith and requires you to do something irrational. You ever heard the founder of Apple talk about that? He's saying, like, you really do have to love what you do, because otherwise no rational person would do it. Any rational person would just give up because the amount of work isn't worth it unless you really enjoy it, right? It's like that. Yeah. But you have to have so you might not know that your particular implementation of things is right, but you want to at least start with the foundation that you know is true to even stand a chance. Otherwise, it's just, you're just spinning your wheels for nothing. Oh, need technical advice. I have a GeForce 3070. Very nice. And a 6 monitor setup. Oh, yeah. And I'm setting up 6 monitors. I've zeroed in on 27-inch at 1440p. Can my, yes, I think you probably absolutely could. 6 monitors is a lot. You probably don't need 6 monitors, but your system will absolutely be able to handle it. In reality, your any graphics card will be able to handle X number of displays, right? Like, that's why they have 6 outputs on them. They wouldn't put 6 outputs on them unless they thought that you could really run 6. As Austin LeBron already taught us, Edge is a story we tell ourselves we never really know, and with human biases, retail traders tell the stories they want to hear regarding their edges, which aren't really true, neither hold or any rigorous testing. Yeah, and that's what I'm saying is that, like, you first need to prove that the market actually does something. You need to prove that the market responds to this, and that this is a thing, right? That way, the leap of faith is you, right? You don't want the leap of faith to be the foundation, right? Which is what a lot of price action people are doing, right? So there's just not any statistical data to back up what they're doing, right? Does 3070 only supports 4? I think it depends on the one you get, because I'm pretty sure that there are some cards out there that have 6 on them. The AMD cards definitely have 6, but you would need to have enough ports on the back of the machine. Or well, you might be able to do it with USB, but what statistical data? Well, go and read the market microstructure studies, right? Go and read trades, quotes, and prices, markets under the microscope, and that's a whole book full of stuff like that that's proven. Like they have a math. Remember, so like, here's another thing is remember that all models are wrong, but some models are useful, right? So if a model was perfect, it would just be the real world, right? Model is always an abstraction of something else, right? But what you can do is you can build a model, a mathematically sound model, and then you can compare it up against market data to verify your model. And so these are all models that have been shown to be useful and backed up by the actual behavior of markets and give us a lot of insight into how markets move. I think the biggest one, so like in terms of like, what does the typical retail trader mean or believe, and what is the reality? So it's been long known that there is a strong autocorrelation of order signs in the markets, meaning that if I come in here and I see a buy in the treasury, and then I wait an hour, there is a 0.05% chance that I will also see a buy, just chosen completely at random, which sounds like really tiny, but it's just like that's a very, very high persistence. So if you see a buy, you're likely to see more buys, right? What causes this? And retail traders think that, oh, I see the buy, so I buy too. So it's traders mimicking each other is what causes it. And they've gone through and they've done all of the studies on this. And I'd say it's pretty conclusive at this point that it is the splitting up of large meta orders that causes this phenomenon, and not traders trying to copy each other or follow each other. So I think that that's a really significant piece of information about the way that the market functions that retail traders should take advantage of, because retail traders think it's just like it's a trend. Like I want to see which way the trend is going and then just go along with the herd. And really all that does is make it easier for them to herd you and take you to the slaughterhouse, right? Whereas if it's because of large meta orders being split up and executed over time, then what do you want to do? Well, you'd want to know what the large meta order is doing, preferably before he does it, right? So then you want to study all of the different types of firms and the kind of strategies that they use and the sorts of things that tend to predict their order flows, so that you can predict what they're going to do before they start executing, right? Please describe what edge means to you. Is the probability more than 50% for it to be called edge to you? Okay, so in terms of like stats, so here's the thing. If I go in and I do a stat on the market and it comes out that it's like a 52% chance that I'm going to be right, sort of a thing. Let's just say that it's just a 2% edge. Equal risk reward, 52% chance I'm going to win, right? First of all, that might not be statistically significant if you don't have a large enough data sample. You're going to need like tens of thousands of data samples. And even then, 2% might not be a statistically significant enough edge. All right. So let's take it a step further and say, okay, you have a 60 equal risk reward. You have a 60% chance of being right. And this is over a large data set that's like 10 years and millions of trades. Okay, cool. If I don't understand why that happens, I'm not going to trade it. Right. To me, an edge has to be more than just the appearance of a statistical abnormality in the market. I need to understand why that statistical abnormality happens. And I would prefer to know that that abnormality is caused by something to do with the market microstructure, right? Because if it's caused by the market microstructure, then I know it's not going away, right? If I know it's not going away, then I can trade it, right? And then the key is just trade it, take advantage of it, and hope that nobody else figures it out, right? That's what edge is. But edge means, but I think that there's like a more practical side to this, and that is, edge to me is not just like a random chance. Edge is, I know something that is going to actively cause the market to resolve in the direction that I think it will, right? So if I have a piece of news like that the CPI or that the PPI was lower than expected, and that's good for markets, okay? That's that news, the news itself is going to directly affect the markets, and I can predict how it's going to affect the markets. Versus I see a setup and like it tends to resolve in this way and I don't know why. Like the market is not doing something because it had a pattern, right? I saw a pattern, and then that means that the next thing they do is this. Doesn't work that way. Doesn't work that way. And that's not causing the thing to happen. That's just a random statistical abnormality. You get what I'm saying? Right? So I'm not taking a trade unless I have a piece of information that gives me a high degree of confidence of predicting where it's going to go. And that's what I try and look for edge. Which is why going back to something Lucas said earlier that I didn't read out, but the market really comes down to informational inefficiency to some degree. right? I didn't trade it today because I realized that I was not on the side of having the informational advantage. So I had to swallow my pride and say, okay, let's not trade it. We could still get it. I mean, the market's still moving a lot and we've still got a lot of time here. So we might be able to take a trade out. They may move up. I'm seeing a little bit of buying volume coming into the 10-year treasury, so I might be able to buy. I think that 3.81 is not a bad price. I'm not quite sure if the timing is right though. Well, NASDAQ killer, I come in and I take trades all the time. I don't know what you want from me. Yeah, there is a Fed speaker. That's that too. So like the bounce off of the post news lows at 14, I think it was only 10 minutes ago. So that's not the right timing, right? Yeah, not the right timing. Thanks for the play. Oh, thank you very much. Oh, so you wouldn't know. I bet you watched all those videos. Were they helpful, huh? When I get a new guy that comes in and they're just learning, it really helps me to see how they progress through watching those videos, because that kind of lets me know where the holes in my content are, right? Well, so there was Harker, which wasn't on my list, and then Cook, she was just speaking to a conference. I think that there's going to be audience questions. I don't know if that one's still going on. And then, yeah, there was Barr, who was doing a congressional session. So I think that there's still a chance of seeing activity off of those, but I don't know if it's a huge factor at the moment. Oh yeah, no. Yeah, watch the playlists. Watch the playlists. I mean, the live streams, like, here's the thing. Watching past live streams can be really helpful. Like when you're trying to gain screen time, watching the DOM, that's where that becomes really useful, right? But the best thing to do is to come in and watch it live and interact, right? You know what's something that drives me crazy about our current world is, like, seriously, social media teaches you to be narcissists. Like that's really what it is social media encourages everybody to become narcissistic. You have to be really concerned with how popular you are and always appearing right. Yeah, if they think that you're wrong about anything, then they disappear. So you have to always appear to be right about everything and that you're just like absolutely perfect at everything. So you notice very many of the most popular creators in the creator space either don't show their results at all, or they're trading like with massive risk so that they win most of the time, and then the one time that they blow their account, they just memory hole it, right? There's a reason for that, right? The social media basically encourages that. You'll have more success if you do that, right? It's so frustrating. But like, the reason that I find it so frustrating is because it destroys and it just makes it pointless. The greatest thing about social media, right? Like, if the purpose of the media was for me to be able to reach a large audience, like, heck, I could be on TV and I could do that, right? The internet gives that opportunity to more people, but in the end, you can reach masses of people with TV and radio and stuff. What is actually valuable about social media? The ability to interact. You guys are here on the stream. You can ask me questions. You can tell me things that I'm not seeing. I can tell you things that I don't think that you're seeing. It's a collaboration. And a lot of the success that we've had comes down to that the YouTube stream chat is so smart. And you're like serious traders that are really trying to work and understand the things that I'm talking about, right? And that allows us to be able to do research and find the edge that we would otherwise not be able to have. This is the collaboration, right? So that's where, like, what trying to learn the DOM, I say come in and, you know, get your setup going, put up the same screen that I have, and then listen to the stream and ask questions. And that's the best way to learn, I think. Can we have BTC? Or yeah, you can. Well, so most Bitcoin exchanges do give you order flow for free even. So that's kind of a cool thing about Bitcoin. But the thing I would caution about Bitcoin is that here again, we're looking for informational inefficiencies. Most markets have reasons that they move. Okay. Like people buy corn because it's food and people need food to live, right? So there's a reason why there's a market for corn. And if there's too much corn, that's going to make the price go down. If the harvest wasn't very good, it didn't rain enough, then there's not going to be as much corn. There's all these things that affect that market directly, right? So things can happen in that market that, you know, have to move that asset, essentially, right? Predictors of order flow. In Bitcoin, there is nothing like that. There is nobody out there that needs Bitcoin to survive. And there's nobody out there that really, frankly, even needs Bitcoin to run their business per se. So the supply and demand, you know, the order flows in Bitcoin are largely created by the whims of large whales. And that makes it, as such, very, very difficult to find any kind of informational inefficiency in Bitcoin that you can use to your advantage. And I think in most cases in Bitcoin, what's going to happen is you're just going to get screwed over by the exchange. Because that's what those exchanges do, is they look at what your positions are and screw you over. So I'm not a fan of trying to day trade cryptocurrencies. You could swing cryptocurrencies, but the current environment I don't think is very conducive to that. The current environment is that if you put money in Bitcoin, you're probably going to lose it. That is also the answer to the old paradox. If markets are so efficient, why does anybody trade? There's movement and trade because each party has different pieces of information they decide to act upon. That's true. That's true, Lucas, but I wouldn't say it that way. Because I would say markets aren't actually that efficient, right? Like that. Like think about it from this perspective. There's different levels of, or there's different forms of efficiency. You can be statistically efficient, which is if you just look at all the data, can you decipher a statistical aberration in it, right? And then there's informational inefficiencies. Is the price reflective of all currently available information? And is price reflective of even the information that is maybe not publicly available, right? The strong form efficient market hypothesis says that current price is reflective of everything, including private information from insiders, right? And the reality is that it is not informationally efficient at all. And so that's why there's a reason to trade. There's a reason to trade because in reality, the market's not informationally efficient. But when you think about it, which type of efficiency would be more important to have? Well, I think that a retail trader would prefer that the market would be statistically inefficient, right? Because then anybody would be able to come in and just trade some pattern and make money from it, right? It would be a different world. If in this different world where somehow markets were not statistically efficient, then like everybody would day trade, right? Everybody would day trade. But really, in order to have like a functioning economy and stuff, it's better that it's very statistically efficient and not very informationally efficient. We would like it to be informationally efficient, but if it was perfectly informationally efficient, there would be like no reason to trade. There'd be absolutely no reason to do anything in the markets. That's why the system that we have is ultimately better. So it's not informationally efficient on short time frames, but then that informational efficiency is recovered when you go out to a really high time frame, like 3 years, right? There's a 3-part series called Bulls and Bears. It follows a bond trader in Australia. Very interesting series. In part 2, you see he has screens, and it's super interesting what they've looked at then. Are you talking about the one where they follow Bulldog or whatever? Because that one's really interesting to me. I think I've seen the one that you're talking about. Problem is, you're talking in absolutes. The markets are not statistically efficient 100% of the time, the same way they're not informationally efficient 100% of the time. So I think like when you're looking at it like from the perspective of, okay, what percentage of the time is the market statistically efficient is not really makes sense. So why do we say that the market is statistically efficient? Because it's nature, right? The way that the market actually functions creates the statistical efficiency, right? If something works, you're going to size up, you're going to trade it, and that's going to remove that efficiency from the market. If you're a really smart trader, you can figure out how much size you can trade to maximize your winnings without destroying the inefficiency, right? But because of the way that the market works, it's statistically efficient and informationally inefficient. And that's what we mean by that. So to say that it's like efficient X% of the time is not really make sense, right? But can you find an inefficiency? Like, can you find a statistical inefficiency? Is I think the point that you're trying to make is that you can find a statistical inefficiency. Yes, theoretically you can. It's just that in practice it's not worth it, right? But I think that the main reason we focus on this is because what I'm saying is you're not going to go and find a strategy on the internet and put that into practice, and that's definitely not going to work, right? So then you need to go and find one on your own, right? And I'm just saying the amount of work that is going to be required for you to go and find one of those inefficiencies and really truly verify that it actually works, right? It's whereas you could just come in and start trading the informational inefficiency right away, right? Because it's like it's laying on the ground everywhere, right? So it's just, from a tactical perspective, it's just not worth it to look for statistical inefficiency anymore. I guess that's a judgment call on my part, but that's just the nature of the market, right? We're having a grown-up discussion. Why use the example of picking up? Because that's what the vast majority of people do, right? That's what the vast majority of people do. But then even to the point, like for instance, what you do, Lucas, right? The problem with what you're doing is that we're not really going to know how effective it really is until you've been doing it for years and years and years, right? Because you're not doing something that we can really automate or backtest, right? You just have to like trade it live for long enough to determine if it's actually an inefficiency. And then we still have to look at things like the rules, like, you know, what's the risk reward that you're looking at and the actual stats that you're getting and stuff for us to determine if there's really actually an inefficiency there, or if it's just like within the margin of error. And like that's the whole problem, is like the last thing that you want to do is come in and trade something for 5 years and then realize that the results that you thought you were having were really all just within the margin of error, right? But maybe there's something about the way that it works that you have reason to believe based on your own modeling of the market microstructure that is going to do something. Why 5 years? So 5 years, the reason I say 5 years, okay, so like if you were going to go and invest in hedge funds, you were going to have somebody else who's going to trade your money, okay? You were going to give your money to somebody else. How long of a record would you want? So I tell you what, I'm not doing it unless it's 5 years. That 5 years is just like the institutional standard. Like any kind of fund results less than 5 years is considered not useful. Like when they give awards for, because there are people out there that there are organizations out here that do this. What's the best hedge fund in 2022 and whatnot? They look at their 5-year adjusted returns. Wouldn't even just be 5 years. You would want to do 5 years risk adjusted, right? Doesn't make any sense. What I do might have edge now and not in 5 years. Okay, so then here's the question. Is it really worth doing if it can disappear that fast? Because in that time, in that 5 years, you could be spending that 5 years developing and practicing on something that you know won't go away, right? If it's based on the market microstructure, then it shouldn't go away though, right? You might be outcompeted for it, but it shouldn't go away. No, so if it's based on the market microstructure, number one, it won't go away. Okay, this is why traders are still able to trade like correlations and catching the edge and icebergs and all these sorts of things. It's competitive, right? So the robots are making money from it. And there will always be a robot out there somewhere that's making money from it. It's only going to be the fastest one, right? And the informational inefficiency is never going to go away. Because it's caused by the very structure of the market, the very rules that we use, the system that we use to trade. A two-sided auction, a limit order book, causes these things to happen, right? So that doesn't mean like never look for statistical edge. I'm just saying the informational edge side is there. I would never stop learning and working on your informational edge, because that's the one that you're always going to be, if you find a technical strategy and then it disappears, you'll always be able to fall back on your informational edge, right? Yeah. And it really is like, if it disappears. I mean, you might, if you're getting out competed for the edge, you might not be able to tell that you're being out competed for it. You might just see it in your stats that like it stops working, right? But it can be random, or it can be just like the tendency of the market, right? Like you could be seeing a behavior, and you see that behavior because a certain large player operates in a certain way, right? And when that large player goes kaput, then the edge disappears, right? I've definitely seen situations like that where it's like you'd see a signal and it would start to get stronger and stronger and stronger, and then one day the signal would just get like absolutely destroyed and screwed, and anybody that was trading on it gets screwed, and then you never see it again. Right? I might still be making nice money and returns out of it. Why not exploit it while it's there? Well, the thing that I'm worried about is that you're going to go in. Basically, it's not a good trade-off, right? You're focusing and developing on this small edge that might only last for a certain amount of time, and you're not going to be able to. You're not going to develop the bigger edge that is worth a lot more money and is never going to go away, right? I'm just saying that, like, from an overall strategic perspective, it makes sense to develop the informational edge above all else, right? How do you develop the informational edge? Well, you have to sit in and you have to aggregate information from lots of different sources. You have to understand as much about the market as possible. And then you need to look for situations where you have information that might predict the future order flows that the rest of the market hasn't picked up on yet. So let's do it now. You can't force the market. Sometimes you have the informational edge and you don't. At the moment, I don't think I have an informational edge. As soon as I get a piece of information or I see something in the market that confirms some piece of information that I already have to suggest that I have that informational edge, then I'll take a trade. As a definition of edges, each edge is small and doesn't last because of how well, but no, not following here. Wait, what were you saying before? I might make money returns. No, like, okay, so again, the argument is, where should you put your focus, right? So we're just saying, when we look at the market, we can split the market into two major categories, right? There is statistical inefficiency and informational inefficiency. Statistical information inefficiency is you can come in and do math on the market and detect a pattern that when you see that pattern, that pattern will predict very well what happens next. Informational inefficiency is how reflective is the current price of all of the available information, and is there information out there that's not reflected in price? Okay, so what we know, because of the market microstructure and all of the research that we've done, markets are very informationally inefficient and very statistically efficient. Okay, so informational, which would do the right, my right hand will be informational. Okay, the informational inefficiency is everywhere. It's abundant. You can see it. If you start focusing on it, it is something that you can look at and you can practice at, and you can say, okay, how good was I today at being in the know on the thing? When I did know something, how was I able to execute on it? And it's very tangible, and you can very, very much work on it, right? And that, because of the very nature of the market, that informational inefficiency will always be there, and it will always be worth a lot. Those are the ones where you're going to be able to make a really, really big trade and make oodles of money, okay? Versus the statistical inefficiency, that it's going to be super, super hard to find. It might disappear after you find it. It's the amount that you're going to make out of it is going to be smaller, right? So from that perspective, why would you go after the statistical inefficiency rather than the informational inefficiency? It's not that it's impossible to find this statistical inefficiency. It's just that the amount of effort that you're going to put into it compared to what you get paid out just isn't good. It just isn't good. It's just like, if you're starting in college right now, what career should you go into? Right? Should you go into computer science, where they're hiring oodles and oodles of people, and even if you're like, doing fairly relaxed work, you still make six figures? Or should you go and become a DJ, where you can work your ass off, and there's so many people trying to do it and so little opportunity for it? And even if you do get the opportunity, the amount that you typically make, unless you're at the very top of the game, is usually pretty low, right? It just doesn't make sense to pursue the one or over the other from a logical perspective, right? If I find a statistical inefficiency, it doesn't make sense to exploit it because it will go away eventually. What if this funds my informational trades? Well, so if I don't think that so, like, what you're saying is kind of theoretical a little bit. So let's try and bring it back to like practicality, right? If you have a statistical inefficiency already, then certainly it would make sense to try and trade it, right? The problem is, how do you know that you really actually have a statistical inefficiency, right? like if you're coming down, like here are the metrics that I would use to do this. Okay. If I'm trading equal risk reward, it's a relatively small profit that I'm making each time, but my average winner is equal to my average loser, but I'm winning 60 to 70% of the time over a period of multiple months, then you might have something that is a real statistical inefficiency. And we wouldn't be able to truly confirm that until we had been doing it for like 5 years, right? But that's kind of like the amount in order to get ourselves beyond like the noise. That's like the amount of edge that you would want to be seeing out of a method like that to really feel confident that you really have something, right? Right. But even then, that would only be like, what would it take for me to want to continue trying to trade it? That's what it would take to make me want to continue to try and trade it, right? But in order for me to like come in and say that it really is a true statistical inefficiency and like start offering it as a hedge fund to other investors, I would need 5 years, right? Yeah, I don't know what NASDAQ killer is going on about. He seems to want to try and goad me into a trade, which is just kind of silly. It's okay. Yeah, I don't think that we knew anything today. That's why we didn't take a trade, but brah. See, you're falling into the trap that I'm trying to warn you guys about, NASDAQ killer. Seriously, stop and think about this for a second, right? Social media teaches you to be a narcissist. Social media teaches you to come in and say, I'm better than you. I deserve the attention. I'm always right. I'm never wrong. That's what social media teaches you to do, because that's what will get you the attention on social media and bring you the success on social media. Trading is the exact opposite. Why? Because as much as you might know, as much edge as you might have, it is this teensy weensy little tiny subfraction of the overall picture. You're talking about something where it's like, you know, you have something this much, like literally like an inch, and the total market is the size of the room, right? As great as you are, it's only this teeny tiny little spot of everything, right? So in that perspective, does it matter how great you are? No, it does not. It does not, right? The only way that you can have success in that situation is to understand how insignificant you really are. And wait for the one moment where you know that you have the advantage, and only that, and only put yourself at risk when you know that you have that advantage, period. So this kind of thing where like you're always constantly taking trades and stuff like that, if that's what you're doing, you're probably just trading noise. Right? So when I was coming in and saying, like, if I was getting equal risk reward and I was winning 70% of the time, like the where I pull those kind of metrics from are like, if I was old school and I was doing a market making strategy, that's how I would want to perform, right? So I would be extremely skeptical that I would find anybody that's hitting those metrics. I think there's probably at least one person that I know that might be hitting those metrics, but that's like a really, really high bar to hit, right? And I don't know if they're doing it anymore. I haven't heard from that person in a while. Well, come back to the point. The point is that you want me to come in and just make a trade at this very moment, and we're sitting here and we're saying, listen, edge is very limited. We're only going to take a trade if we have an edge, and you don't always have an edge. You don't always have an edge. And the real skill, the thing that's going to keep you at the top of the game, is being able to determine when you have an edge and when you don't, and just not trading it when you don't have the edge. And that could go through, you could go weeks or even months and not have edge, right? What informational edge do we have more than CPI today? Today, I don't think we really have one. Especially because of the way that this all kind of turned out. Like, now that you get the action that you are, like the informational edge that I think that we have right now is our understanding of the market microstructure that tells us that the market's going to be pretty hard to trade here in this period, right? So you could try trading it off of, if you're a noise trader, maybe this is good trading for you, but right. We have something that's telling us to actively like not get involved in this market, don't we? What do you think about the auction so far in ES? It seems like chop and trap. Yeah, well, you notice that like since we've opened, it's just been like, bleh. Like really side. Like look at the freaking chart, man. It's like perfect side. Well, I guess you could call it a consolidating triangle, but yeah, it's not very good. It's not very good action, is it? I mean, I generally speaking, a trending market is gonna work out better for a retail trader, right? This kind of a market is the market where the market makers have a really big advantage on you, right? Yeah, you could come and try and scout this range and just have a really wide stop, but that would be more noise trading, right? So the noise trading side is a different kind of issue, right? Because we don't really have any evidence that you can really be profitable in the long run from noise trading. I personally think that you might be able to. I think that you might be able to come in and say, okay, here is a situation where the market's going to be just noise, so I can trade it. And then you stay on top of the informational stuff and avoid them, right? You're not going to make as much money that way, but it may be one way to trade. But we are talking about actually developing edge. We are. You don't understand. So it's everything that we've talked about has been about developing in the edge. I think the issue is that you want me to give you a signal, right? You want me to give you an entry signal. No, I'm not going to do that. Right? The way that I function, if you guys haven't noticed, is that I don't come in and say, okay, this is the trade that we should all take, etc., etc., etc. I give you the information that I think you need to have in the hopes that you'll be able to figure it out on your own, right? Yeah, it's a secret. But I don't have anything to trade on today, so. I mean, the thing is that in the situations where like we really do have edge, the moment at which we realize we have edge and we need to act, it usually happens really fast, right? That's the crazy thing about it is like sometimes you blink and you miss it. I mean, I think I can relax and talk more on a general high level about things in situations where I know that the action is just going to be bad, right? But in the situations where I think that I might have something, yeah, I do have to stay a little bit more focused than I usually am, because the opportunity might not be there for very long. Under 4,000 is a failed breakout. Well, so when I think back on here on this market, what is the information that we got today that's different from yesterday? Well, um, China and Biden had a discussion with China, and they said nice things after that. So I guess that's good. China had some economic numbers released last night, and they were very, very bad. So there's hopes in the market that there will be stimulus coming from China, right? We had Fed speakers, and it seems like the market is kind of leaning with Brainerd and saying that they have to slow the pace of rate increases if, and the market seems to believe that is going to shift to we need to start decreasing rates, right? And then PPI came out to be 0 versus 0.3. So we got a really strong number of things to suggest that today should be an up day. Well, we are up, okay? But yeah, for us to come up here, if we bounced and then closed the day below 4,000, that would be awfully discouraging, wouldn't it? I think that would have a really significant impact on the sentiment. It would kind of put a kibosh on this rally. I don't think that they could be careful about, we need to be really measured about what we can actually gain out of a piece of information, because I think one of the mistakes that we constantly make is we'll have a piece of information and then we'll say it means X, and we want it to be this big huge thing because that's like what makes people listen. But usually what we can really say we know from a particular thing is usually quite narrow and limited, right? So a close below 4,000, I do think that would hurt sentiment, yeah. Would it mean that we go to the lows of the year again? Nah, I think that we've probably seen the lows of the year, but we'll see. It will be a mistake, the same mistake the Fed made some time ago when they said inflation was transitory. Yeah, well, okay, so here's the thing about it being a policy mistake, right? Is Federal Reserve policy has to factor in risk reward. And especially since it's something that affects everybody, there's a real particular focus on the risks, right? So the Federal Reserve can't come in and say, well, this thing tends to come out this way 55% of the time, and so we're willing to take it this time, even if when we're wrong you lose a ton, right? Federal Reserve can't do that because it would be harmful to too many people, right? So that's where it comes into this situation where I personally think that if we get into the situation, I mean, I think we're probably already in a recession, right? But if we get into the situation where come next, by next May, we're really in really bad economic environment. It's we're comparing this to the Great Depression, and it's a really, really deep and really, really ugly recession. And the Federal Reserve has to turn back on the money printers in a hard way. Okay. Let's say that we get to that point. Okay. Then we would say it was a policy mistake. Well, I think you could call it a policy mistake in that what ended up happening and what the Federal Reserve did not help, right? You can call it a policy mistake. But can you call it a policy mistake from the perspective of the Federal Reserve should have used a different strategy? I don't think so. I think that the Federal Reserve is correct in that the risks of higher inflation in the midterm is more. And so they have to weight that risk appropriately. And that means that they're going to have to accept that they're more likely to overshoot. Which kind of sucks, right? I don't know if we're really to the point now where it's we overshoot, though. I don't know. You know, based on the way that it's been going last week, I have to say I am much more hopeful of a soft landing than I was 2 weeks ago when Powell was speaking, right? When Powell was speaking, it was like, well, it's not going to happen now. Prepare yourselves, right? But what I think I'm seeing right now is that the market has already priced in like peak week earnings and everything, and now they're starting to price in the recovery. You know? So, and like, here's the other thing, is that you and I, especially you and I, because you've been here from the beginning, right, Lucas? I think we have about similar time of experience now at this point, yeah? We've never traded this kind of an environment, right? And one of the things that I'm learning here is that raising the interest rate is not as powerful as I thought it was. Like the amount of quote unquote tightening, you know, of tightening in financial conditions, that raising interest rates 25 or even 75 basis points is not nearly as high as I thought it was. It was not nearly as high as I thought it was. So I think that even though it looks like we're slowing down and that the Federal Reserve will eventually have to reverse, like the market has been predicting. Now, before I was a little bit skeptical, but now it's starting to become much more likely, right? Does that mean that, like, if the Federal Reserve raises another 50 and then another 25 and maybe even another 25 after that, that would just like absolutely devastate the market? I don't actually think so. Right? So I feel like the trajectory is set, and it's just kind of a question now of like, where does the number actually come out to, you know? Who can say? But that's why I say, from that perspective, I don't consider it a policy mistake. Now, the other one though, that was a policy mistake. 100%. I think that I understand why they made the decision that they did, but I don't think it was the right decision. And I think that they need to work towards avoiding having that problem in the future. Because basically what they did was they allowed the hysteria that was going around and all of the pressures from the politicians and everything to keep them easy longer than what the economic data justified, in anticipation of an event that never happened, and it turns out was never likely to happen. And we had the information to know that that's how it was going to turn out at the time, but we had experts on the medical side feeding us bullshit, right? That's why they did it. Basically, they made the same mistake that most people did, right? You need to read about the 70s and 80s when the Fed would move a whole percent at once instead of basis points. Well, but that only happened like twice, right? My memory is a little vague on this now, but I remember looking this up, and because it was the very end of it was when Volcker said, okay, we're going to do a whole 1%. And then that was the end of it. That was finally the thing that the market was like, oh, okay, this guy's actually serious. They chilled out. Do you think they will apply QE? Oh, I think so, yeah. This is a really insightful question. I think so. So here's the thing is that, okay, so let's assume that that's the way that it goes out. Let's not say that it's a deep recession, okay? But let's say that by next March, that the board that says where we have official recessions and all of that says this was a recession. Maybe it was just barely, but they'll say this was a recession. Okay. Where do we go from there? What's the policy from there? Okay. And I think that you only do QE to the degree that is necessary to keep markets functioning. And I don't think you want to use QE to ease financial conditions, much if at all, because the risk that you have coming out of the next recession, if there's a recession in 2023, the risk that you have coming out of a 2023 recession is that inflation comes roaring back with it as well. And if you start doing the quantitative easing and all that sort of stuff again, then it's more likely to cause that to happen, right? And you're still going to have all of these people that their incomes is lagging inflation and stuff, right? So you're more likely to start to get those, like, you know, that cycle of wage increases feeding into price raises and all that sort of thing, right? Like, that's a problem. So if that happens, then yeah, the Federal Reserve probably won't be able to be as easy coming out of that recession. And so it probably would be like they would reduce interest rates and ease financial conditions, but hopefully not back to zero, for instance, right? And it would mean that the recovery would have to be slower, right? That's at least when I game it out in my mind, the conclusion that I come to. But to be brief, because you remember when I was back, you know, last summer, I was like, this is ridiculous. I can't believe that they're not raising rates, but they're concerned about another Delta wave. Well, I was skeptical of that, but I wasn't confident enough to say it out loud, right? They were banning people for that, and clearly if they care about it that much, maybe I must be wrong. But I felt like they should have been easing the whole summer, right? So they got that one wrong. But I'm on board with their current trajectory. You know, the real practical question here is, do you think that they should raise interest rates 50 basis points in December? I say yes. If I was on the Federal Reserve Board, I would be saying yes. Let's do 50. I got to get going, guys. I will see you tomorrow. In the meantime, stay excellent, team.